What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 67. It's September the 14th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about the important levels that we have on the chart today. So we have yesterday's closing price way down here below at 34,923. Now, this level played more of a factor in the pre-market, but once the market opened, we haven't really seen prices come back and test that level as of 1023 right now. Now, the most important level that we do need to talk about is this level right here, this red line that establishes this overall range that we were trading in when the market opened. So if you check out the range extended from 35,160 down to a low of 35,045. So a very large range to trade inside of. Now, the lower level of the range was established from some pre-market activity that happened right before PPI came out this morning. We established a double top up here, came back to make it a triple top. And from that point forward, I just drew a level of resistance across that. And that came back to be a major level of support. So let's go ahead and get into it and talk about this range that we traded today. So let's see, where do we open? Open at 930 right here. So let's start from that point. Actually, let's start from the top of the range. So we established this point at 921 this morning and then sold down, created a lower high. So that tells us that the selling is definitely in the market right now. And then we see prices push all the way back down to retest what used to be a previous level of resistance that should now act as support. And that's exactly what we saw. We saw a good bounce the first time it came back into it, bounced about, went from 35 all the way back up to around 95. So a good 60-point bounce. So that's pretty healthy. That tells you that the buyers are in the market. So then we sold off a little bit, but came back down to the bottom of the range. And then we saw the buyers push prices higher, eventually all the way back up to the top of the range, which makes sense. Now, when you look at the trades that I made, trade number one came at the bottom of the range. Now I shorted right here in expectations that the lows for this candle, let's actually pull it up. So the low for this candle right here was 43. So the way I like to short, I like to look for prices to come back and retest a previous level that used to be a swing low. And I want that swing low to act as the new level of resistance. And then I want to see prices move away from there. So that's the idea I had on trade one, where I went short right here at 35,040. But the only thing was, for one, I was shorting towards the lows of a swing. You never want to do that. Like, even though you might see a previous low coming back to get tested, if that previous low also happens to be an area where if you went short, you would be shorting towards the lows of the swing, you still don't want to take it. So for instance, if I'm looking for the setup that I was trying to take at one, this right here, this touch on this candle for this wick would be a better example where you had prices come back up to retest a major level of support that got broken through and now should act as resistance. So that's the scenario where you would want to short a market like this, but you don't want to short it when you're coming back up into the lows and you're already towards the lowest prices of the swing. So that's one big thing I learned right there on trade one, and I had to take a loss right there. And also the second point about that is that if you look at it, I'm trading the short side from the bottom of the range. Whenever you're in a range bound market, you really don't want to do that. You want to either go long at the bottom of the range or go short at the top of the range. And those are pretty much the only two things that you really want to think about when it comes to trading the range, or else you might have to take losses like I did on trade one. Now, granted, I wouldn't say that I was 100% sure that this was a range because we never really established the top part of it. But still, even though I didn't know that part, looking back on it, I did know that I was shorting at the lows of the swing. And also, one more thing that just tells me that this trade wasn't a good entry was the fact that I entered on a long tail candle wick. So let's zoom in and look at this one specific candle that I entered in and went short on. Notice how the candle wick is a very long tail candle wick and it closes green. Anytime you see something like that, that's telling you that the bulls and the buyers are in the market. And when you combine that with the fact that we were at the bottom of a range, it makes sense that buying would come in right here and demand would be shown from these levels. So just a couple of lessons that I learned right there on trade one. Just got to learn to not be so quick to jump at your trade. You want to make sure that everything aligns before you get in to trade that you're looking to take. So after trade one, we see prices push back up, move away from the lows of the range that we were trading in, and then we finally created a lower high right here towards point number 2. Now once this lower high got created, I circled it up and drew my level of support across it, and then I just looked to go long as prices came back into that level. So the thing was, what was really interesting about this trade right here was that usually I would just put my order at the support level, wait for prices to come back into it, and then just have my order sitting there. But today I was like, yeah, you know what? I see this lower high that we established a little bit earlier. So if prices reversed right here, it would make sense that this could be a potential, another potential lower high. So I said, okay, I'm not going to necessarily go long as it comes back into the support level. I want to see the reaction that I get when it comes there, and then I want to make my decision. And I think that was a really good choice for me to make, because if I put my order right here at 35,088, I would have probably, well, not probably, I would have definitely got stopped out as prices moved down by another 20 points on the wick for that candle. Now, what's interesting is that we see prices bounce all the way back and come back to close right on the same level of support that the higher low was established from. So that right there is when I went long, because even though I did see a little bit of selling on that long tail candle wick, whenever you see prices come back up into a higher low support level and break right back above it after they just had a quick move to the downside, you got to get back in, because that's telling you that the demand is so strong at that level that they completely overwhelmed all sellers, and more than likely anybody that shorted from up here in expectations that these bodies over here will hold up. All of these people that were short, more than likely they're probably going to get out as they see prices starting to move closer and closer to their entry price somewhere around the top of this wick. And then for the traders that are stubborn and continue to hold it, they'll probably get their stops hit. And if you short it right here, where would you put your stop? More than likely, either you'll put it at these bodies up here or at the wick right here. And that's exactly where we see prices come all the way back to. So it makes sense that the long tail candle wick actually worked right here, because we see all of the elements that we really need for it to be successful. And whenever you have a higher low setup like this, those long tail candle wicks can tell you a lot, especially when they bring prices right back up into that support level for the higher low. The only thing is, when it comes to this trade, it's going to feel very weird, you know, taking that long trade after you just saw a huge spike to the downside that immediately got bought back up. But you can't hesitate. You can't say, well, I don't know. You just got to take that trade, because the buyers are in the market and you want to trade in line with the momentum that you're seeing, especially with the fact that we're already in an uptrend that's established multiple higher lows already. So it just makes sense that trade 2 should be a long trade. So I think I made a really good entry right here. Only thing was, prices came back, they hit my break even stop, and they took me out of the trade. And that's okay. You know, I've been having a very bad habit these past couple of weeks of not respecting my break even trades, meaning that I'll either see my stop get moved to break even automatically, and then I'll try and move the stop back to where it was originally, or I might have my break even stop actually get hit and I get taken out of the trade, and then I try and get back into the trade immediately after. So I think I did a good job right here of just being disciplined, taking my break even trade, respecting it, and then trying to gather some information from it to actually understand what's going on in the market, so that way I can make the next best decision and not just rush into some type of trade that might not be the potential best setup for me. So that's pretty much what led me to trade number 3. So after the break even at 2, I see prices start to move away and create another higher low right here. And a lot of times when you have this higher low strategy, you'll see a little doji wick like this, and I don't really know how to describe it or put it into words. I just know that when you see that doji wick, it's time to go long, because more than likely that's the continuation move to the upside. Now I'm gonna do a little bit more research and maybe come back a little bit later and actually explain it, but that's one of those things where it's like, I don't know how to tell you. It's just when you see it, you do it. And that's pretty much what led me to trade 3. And once I went long right here, I just took it back up to not exactly to the bodies for this wick, but just a couple of points below it, just to make sure that I got my order filled. Got out right there. And then after trade 3, we see prices pretty much come all the way back up to retest the top of the range that we were trading in, that we established originally at 9:21, a couple of minutes before the market opened. So notice how once we hit that level, we wicked away from it immediately and then sold off hard, where we had pretty much nothing but red candles for the next 1, 2, 3, 4, 5, 6 minutes. So once I saw that happen, I said, okay, well, what I did actually, I came over to the 5-minute chart. And if you look at this, this is what I was seeing right here. So let's put a line as to where I stopped at today. I stopped right here. All right, so let's pretend like we don't see any of that. All right, so this is pretty much what I was seeing at the time. So I saw prices come back up, retest this level, pull back down, come back up again. So on the way down, I was just like, more than likely, we should come back to retest this level, and we should establish the bottom of the range, and the range should be respected. So that's pretty much what I was aiming for right there. And then I came back to the 1-minute chart, and I said, okay, the level that I was looking at on the 5 was 35,035, which also happens to be this level that I have down here towards the bottom of the range. So I said, okay, everything is looking good on the 1 and on the 5, and it's looking like prices want to come back down to the bottom of the range. So once I established what kind of market we were trading in, I established that it was a trading range. So then I go to my trading range strategy. If we're in a trading range and we just broke down into it, the first thing I want to do is I want to see a lower high get made. And that's exactly what we saw right here as we broke through what used to be the support level for the higher low. When we broke through it, we pulled back one time to retest it with this one green candle. And sometimes when a trend is strong, that's all you'll get. You'll just get one candle that comes back to retest that level, and then it's going to continue moving. So once I saw that lower high get formed, I said, okay, I know what I'm looking for. I used this candle right here as my reference point to go short from. So I took the low for this candle, which was 82, and I looked to just put my order 2 ticks below it at 80. So I was able to short it at 35,080, and then I took it back down to 35,052, right before we got back to the bottom of the range. So that for me right there, that's textbook. You know, I struggled with the range a little bit on Monday, but then I came back Tuesday, Wednesday, and today, and I just used the lessons that I learned from Monday to give me the fuel that I need to make the right decisions today, yesterday, and the day before that. So I pretty much just followed my trading plan to the T. I saw the trading range and I said, look, okay, you need to go short. I had an opportunity to take my regular 20-point scalp target when we got back down to what used to be a previous level of support from a higher low a little bit earlier in the session. I could have took profits right there, but I learned from my mistakes on Monday and Tuesday, and I learned that, look, when you're in a range type of setup or a range type of trade, no matter how much you might feel like you have good profits right here, you got to let that trade run until it gets back down to the bottom of the range, no matter what the case may be. You know, it's going to be tempting to take those profits because they might be a little bit larger than what you're used to. So you're like, ooh, I should lock this in. But no, when you're trading the trading range, you got to hold it all the way back to the extreme. So I'm just happy that I was able to be disciplined today and make all of these things happen. I would say overall, my performance today was pretty good, pretty decent. I would say on trade one, that's something that I really got to clean up. You know, I'm still not finding myself all the way able to fight those urges when I'm either trying to short it at the bottom of a range or on the flip side when I'm trying to go long at the highs of a range. So those are two things I still need to work on, still need to practice. But I would say other than that, you know, everything pretty much went smoothly. I would say the difference between today and a lot of other days was that I was very calm when I came into the market. I was very patient. I had a very good aura of confidence about myself because I pretty much said, look, the market is going to do three things. It can either be an uptrend, either be a downtrend, or it can be a range bound market. I have strategies in place that allow me to trade all three of those successfully as long as I follow my plan. So all I have to do is come in and be patient enough to only take the setups that I know, and everything else, let that go. That's for somebody else in the market. Somebody else can take that trade, but it's not going to be me. So I think that's the mindset I got to come in with every single day, because my goal now that I'm starting to kind of get a good hang of it and build my confidence a lot, my goal is to be a lot more consistent, because I've had great days, but I've also had a lot of bad days that follow that. So what I want to work on now is being able to string together consistently profitable days, day after day, week after week, month after month, and quarter after quarter. So in order to do that, I got to make sure that I come into every session with a mindset of abundance. Like I told you guys before on some of my other trade reviews, you got to believe that there are opportunities present all day long, because when you think like that, you won't be so tempted to jump at a trade that might not be the best possible entry for you, like I did on trade one. Instead, you'll be like, you know what? I see what I think I see, but it's not giving me everything that I want. So I'll just pass on that opportunity. And when I come into the market with that type of mindset, I'm very successful. So that's pretty much all I got for you guys today. I hope you learned a lot about trading ranges, and also when you're breaking back into the trading range, you look for that first lower high, then you go short and you take prices back down to the bottom of the range. And I also hope you guys learned that one thing you don't want to do is short at the lows of a range, or at the lows of a zone, or at the lows of any swing low for that matter. So I hope you guys learned a lot about that, because I definitely did. I'll be back tomorrow, September 15th on Friday, looking to close out the week strong. But until then, you guys, study hard and take it easy.